Hey everyone, welcome to the Matrix Capital. Big moves in the United States economy today. Inflation just dropped to its lowest level in over 3 years, and the stock market is rallying, especially tech companies. The US and China have struck a 90-day tariff truce, cooling the trade tensions. Meanwhile, President Donald Trump is in Saudi Arabia locking down a multi-billion-dollar tech and defense deal. And in real estate, housing is climbing in hot markets like Austin. But rising mortgage rates are keeping buyers cautious. Let's break it down. Inflation is finally cooling off. The consumer price index rose just 2.3% year over year in April, the slowest pace since early 2021 and below the expected 2.4%. So we are getting very close to the Fed's 2% target. Markets cheered the news. S&P 500 jumped 0.7%, raising the 2025 losses, meaning they hit a higher low in 2025. The Nasdaq surged 1.6%, fueled by gains in AI and tech stocks. However, the Dow dipped 0.6%, dragged down by the United Health. Let's dive into the inflation first. Inflation expectation was at 2.4% for this month, April, but it came down to 2.3%, which is good news. We got a pretty good CPI this time. So let's check the data over here. So we can see the all items here. This is a chart from US Bureau of Labor Statistics. So you can see the data from 2005 till 2025, which is a 20-year of data. And you can see the recession times here as well. So if you look at it here, from February 2025 to March and then April, we see that inflation is coming down. Unlike Fed is thinking that tariffs are going to cause an inflation rates to go up, but we don't see that happening just yet. We see from March 2025 was 2.4 and now for April is 2.3. So March expectations were hit, but April expectations were 2.4 and it came down as 2.3, which is a good news for the general economy. And here we can see some categories. We can check food inflation, which is at 2.8, came down from 3%. And you can see energy is a big one. I think here in energy, you can see it was at 1%. Now it's at negative 3.3. So energy prices are getting sliced. And here's an important one, shelter. Shelter was 4.2 in February. Then in March, it was 4.0. And in April, it's still 4.0. And we are in spring season. So this is where all the houses get listed and a lot of homes get sold. So inflation coming stable here can be seen as a good thing, considering that the house inflation has been crazy over the past years. But there's an important catch here. If you look at the back-end data of Bureau of Labor Statistics, we can see the weight of these categories. So all items out of 100%, food is only 13%, energy is only 6%, and commodities, 19%, medical care services at 6%, transportation services at 6%. The biggest one here on its own is shelter, which is housing at 35%. So housing inflation is 1/3 of the entire inflation data. And that's why housing plays a big part on the inflation. So if you look at it here, from 2024 to 2025, housing is at 4%. From March to April this year, it only went up 0.3%. So if you look at the rest of the data here, the energy is the one that saw the most downtrend, and food and other items, they've also seen some downtrend and some of them went up, but it's the housing that's been stubborn here. So when the housing comes down as well, maybe we will see the Fed's target of 2%. So housing makes 1/3 of the entire inflation data. And Federal Reserve is trying to get to 2%. We see that housing inflation is at 4% year over year, which seems very stubborn. You might be wondering, how is this possible? Mortgage rates are high, inventory is skyrocketed, houses are on the market way longer than before in the past couple of years. Sellers are reducing prices, but the housing inflation is still stubborn compared to the other areas. it's important to note that housing market takes years to play out. It takes years to go to all-time highs, and it takes years to come down pretty much. Once the housing bubble is over, and then we see the housing prices come down even more, and the Federal Reserve ending the QT, we can see the mortgage rates come down as well. That might take the housing inflation down a little bit as well, because if the interest rates are down, a lot of people that just bought homes waiting to refinance their homes, and some of them are actually waiting to sell their homes to get a new one. And they can't really do that because a lot of people locked in their homes at 2%, 3% rates, high 2% and 3%. So they can't really sell their homes right now and then buy a new one because the interest rates, the mortgage rates are so high. So a lot of those people will hit to the market when the mortgage rates come down. There's also a lot of people waiting on the sidelines to buy homes as well. So there will be some balance, and some people might think that this might increase the prices, but if there are enough sellers moving around, we can actually see home prices come down even further because there will be a competition to sell homes. Let's talk about the S&P 500 here. So S&P 500 after the news, it went up, but it did something interesting. So if you look at the data over here, we saw the all-time highs after President Donald Trump was elected. And then Donald Trump took office. And now, after the year started, which we can see over here, this is January. So for the first time, this is January 1st. For the first time, we went above the January 1st this year after coming down. And there was a huge level here. Here we started coming down, and we put a higher low on the S&P 500, which is pretty good. We can see the economy is gaining some confidence. Let's look at the dollar index here as well. So the dollar index has been coming down very sharply, but as you can see here since the start of the year, it's been coming down very sharply. Let's pull up the price range here. We can see that it came down 11% in such a short period of time, which is unusual. But after the recent trade deals, it saw some jump. It seems that markets are gaining confidence. But why is that? The reason the markets are gaining confidence, as I mentioned in the previous video, Donald Trump had teased that he was going to announce big news. We thought it was going to be with China, maybe a deal was going to come. We saw a 90-day tariff pause with China. That's a great news for the United States and the global economy even, because that removes some of the uncertainty where this trade war is going to end. Also, Donald Trump closed a deal with the Saudis, and Saudi Arabia is planning to invest $600 billion into the United States. Let's dive into the details now. Here's an article from Reuters.com. The U.S. will temporarily lower the extra tariffs imposed on Chinese imports to 30% from 145% for 3 months, the 90-day pause, while the Chinese duties on U.S. imports will fall to 10% from 125% in the same period. There's an important thing here to pay attention. The United States had tariffs on China before, but China had higher tariffs on United States, and China was making more money on the tariffs compared to the United States. And after the Trump started raising the tariffs, China has been matching the United States. But now we see that after the latest discussions and then the updates, we talked about how China's economy is struggling, and maybe that is the case here because we see that the United States will be taking 30%, China will only be taking 10%. So this is a big update, I think. It shows that Donald Trump he's maybe winning after all. And we anticipated that in the first video, that is he winning? We will see, but it looks like he's heading into a good direction for the United States. He's making deals that actually means a lot. The second update we have is that President Donald Trump visited Saudi Arabia, signing a strategic economic partnership with the Crown Prince Mohammed bin Salman. The deal includes investments in defense, energy, and technology sectors. Notably, Nvidia and AMD announced plans to provide semiconductors for Saudi AI projects, and Elon Musk's Starlink security agreements for aviation and maritime services. This is important news that Donald Trump has been mentioning that Saudis have a lot of money to spend, and he was like, I heard that Mohammed bin Salman has $600 billion. Let's see if I can raise it up to like 700 billion or something. He had an interview or tweet like that, if I remember correctly. And then and today we hear that they actually got a deal for $600 billion, and that's a lot of money. So that's good news. It shows that there's trust in the US economy, at least from the Saudis, and that will help the markets, the regular investors, me, you, and the businesses gain some confidence that maybe we're not going into a recession and we're getting good news. So this will help people gain some confidence, and people will be less scared if we're going to see some collapse anytime soon. Last part of the video, we're going to be talking about housing again. In Austin, Texas, housing inventory rose 21.1% year over year with 16,558 active listings. However, buying demand is lagging, indicating a potential shift towards a buyer's market. So here's the thing about Austin. There's a lot of new builders building homes every day. So I myself live in Austin. In every neighborhood, in every subdivision, I see a new home builder just building. Austin is not that big compared to Dallas and Houston and San Antonio, so it's still a growing city. And in 2021, there was a lot of migration after COVID. People were working from home, everybody was remote. A lot of people were moving to Austin, and home developers started building everywhere. It is crazy. There's so many new homes, and prices did skyrocket in 2022 and 2023. But after that, mortgage rates went up. Some houses were like 80%, 70% up. People were paying way above the listing prices. So now the market's cooled off a little bit. The migration slowed down drastically. A lot of people are not working remotely anymore. There's probably some people out there, they don't like Austin. They thought they like it, but maybe they're moving back. So a lot of these changes affecting the markets in Austin, and the inventory in Austin is skyrocketing. Let's dive into some data here. This is Team Price Real Estate's article. Austin housing market update. The MLS reports 16,558 active residential listings, up 21.1% from the same time last year, and just 58 listings below the record set 1 day earlier. Within the Austin city limits, active listings total 5,270, reflecting a 24.2% year-over-year increase. This is crazy. This is crazy to me. Despite the rise in supply, buyer activity remains limited. The activity index has dropped to 23.4%, down 13.6% compared to May 2024. So what we can see here is that a lot of buyers are not in the market compared to previous year. So buyer demand is actually low in Austin. And we see the same data in all over the United States. The buyer demand is just not there. It is regional. There are some states that sees price hikes or the market is still stable. But overall, in the United States, the housing market, real estate housing market is struggling. New listings so far this year are tracking 18% above average, while pending contracts are 8.2% below their seasonal norms. The median sold price for May is $485,000, a 6.6% increase from May 2024's $454,995. However, sold transactions per capita are still 33.7% below average, indicating that while prices remain stable, most of the strength is concentrated in select price segments and well-positioned homes. So what does this tell us? This, to me, a lot of homes out there are on sale. That is correct. People are trying to sell their homes, but they're still expecting to sell their homes for 2024 prices, for 2023 prices, for 2022 prices. That train is gone. Some of the sellers have to face the reality And they will eventually, because if buyer demand is not there and inventory is skyrocketing, there's a lot of new builders. Why would anyone buy your 2006 year built home when there's a new home considerably looks the same or the same quality or almost there? So here's the thing a lot of people are missing. A lot of sellers are missing, especially the new homeowners, people aged from 20 to 30. If these people are going to buy homes, a lot of those young people, they're more into buying new homes rather than used homes, because this is what this generation created. Everyone uses new things. I want new. They buy cars, they buy new cars. They don't buy used cars. The used car sales are down, new car sales are up compared to the previous years. The same thing, the same trend will reflect to the housing market eventually when all these young people are able to start buying homes. So a lot of the sellers will have to reduce prices and face the reality that buyer demand is not there. The inventory is skyrocketed. The housing market went up crazy in Austin because there was no inventory. Everybody was buying homes. There were too many investors in the city. Investors were just pouring money. They were paying 50K, 60K, 70K above the listing price. It was crazy times. And that time has passed. If you talk about housing market nationally, mortgage rates edged higher, with average 30-year fixed rate rearing 7% despite the cooling inflation. So if the Federal Reserve gets the 2% target in the next FOMC meeting in June, they decide to end the QT, quantitative tightening, we might actually see that mortgage rates come down with it as well. They may not just end the quantitative tightening, and they might do some interest rate cuts as well, which might help mortgage rate to come down, because debt to income ratio in the United States is at crazy levels right now. Even if you're making 150K or maybe even 200K a year, it's hard to buy a home without the 20% down payment. The debt to income ratio is at terrible levels. So the mortgage rate needs to come down for buyer demands to come back. That's how it seems. We can look at it this way: mortgage rates and buyer demand. If mortgage rates come down, the buyer demand will go up. This is usually what happens in the real estate market. We saw that happen in 2020 when the COVID hit and rates were at 2% and then buyer demand went crazy. It takes time to buyer demand to build up. As I mentioned earlier in the video, for real estate, it takes time to play it out. That's our economic update in today's video from Matrix Capital. If you like this video, please like and subscribe and hit that bell notification button if you want to be notified about the next videos. We are trying to improve and add new things to the channel. It's a new channel. This is going to be the second video. We're going to be using data when we're talking, and we're going to be talking about understanding the system, aka the matrix. If you don't understand the matrix, you can never escape it. Thanks for watching.